most of the people who are going to go lease a high quality office building want to create a really great environment because they want their people back at work, and they're trying to entice them to come back to work.
To build great companies, you have to be together. I think you can service the business, but can you create great ideas? Can you exponentially grow certain departments, certain things you're trying to create? You have to be together. And I think great companies with great cultures, people want to do that. So they want to find a great space. And I think you're seeing it with what you said, the very top tier of the Class A space, the exceptional space. People are like, oh, this is a lifestyle.
It's hot outside, but JC, we're in the Mark Taylor studios. We're nice, cool, feeling good.
I feel great. Summer.
Nothing better, though, than being right next to the calm, cool, and collected Mr. Kevin Calihan, Executive Vice President from CBRE, making it even cooler in here. How are you?
I'm fine, thanks.
So we not only, of course, focus on multifamily, but every vertical, and you mainly take care of the office vertical, correct?
Yes, sir.
What do you see? Let's start more on the personal side first.
Okay.
Tell us a little bit about yourself. Family, activities, anything special, something you're doing right now besides the podcast you just shared with us that we need to start checking out, of course.
Sure. So I'm a native Phoenician, which used to be a little bit more rare.
I like it.
So now it seems like we've got more of those. Worked at CBRE for 20 plus years now. It's been a great career, really loved it, great people, great organization. I've got a great family, 3 kids, wife, and so middle of summer here, so I'm just back from vacation, so was glad to get the opportunity to squeeze in with you guys.
And we should mention that you specifically flew back and left your family all by themselves, flew here just to do this 35, 45-minute podcast.
Yeah, that's absolutely not true.
Okay, I thought I tried.
Thank you for the offer, but nobody's coming back to Phoenix in July.
Yes. And I noticed something too, because I love tenure, right? Not jumping around.
Sure.
You've been at CBRE your entire career, is that correct? Or did you have a couple?
I had a brief start at a bank for less than a year right out of college, and then went to CBRE, started in research. Got the opportunity to work for one of the top teams ever in the city on the office side, and then went off on my own and formed a big team about a decade ago. So it's been a great career. Been lucky. CB has grown from the biggest local and national player to really a dominant player in the commercial services world across the whole world. And so I've been there for that rise, and it's been very beneficial to those of us who have stayed.
Congratulations, by the way. That's awesome.
So,
what do you like to do on the side? Anything fun?
I like sports. I have lots of kids, 3 of them, so spent a lot of time coaching them. I was commissioner of a little league for a while, girls softball.
Are you doing travel ball as well?
My girl's retired. I have 2 daughters. They're in high school now. One is a dancer and one plays lacrosse. But we spent many years in softball. A handful of our girls won a state championship this year. I think we had maybe 4 or 5 freshmen from our crew starting on the state champion team this year. So super proud of all those girls.
I love
they were good back in the day. And then got a son who's 8 years old, so he's a lot of fun. We're spending a bunch of time together. A lot of coaching.
When you tell your kids that you're going to be on a podcast, right, they'll keep focused for about the first 5 to 10 minutes. So we're in the first 5 to 10 minutes. You got to give them a shout out real quick.
Oh yeah, Ava, Mia, and Hank. So they're hopefully enjoying their summer this week while Dad's working.
Well, hello, kids.
They'll pay attention until they stop talking about the kids and move to office.
Now we dive right into the actual market, right?
Yep.
So, Kevin, again, we're talking everything office, very, very important vertical and industry, of course. Looking at the economy right now from your lens, from a general investor's perspective, how would you describe today's market in office?
Well, it's hard because I'm probably going to come off more negative than some of the other folks you've had on your podcast. The reason is our sector has been hit by far and away the hardest of the commercial real estate world. COVID had a tremendously negative impact on the overall office market, whereas it had, it's probably the best thing that ever happened to the industrial market with onshoring and everyone shopping from home and the acceleration of those 2 factors. It had the opposite effect in the office world. So we've really been hit ultimately by a decrease in demand for the use of the space And when you have a decrease in demand for the use of the space, everything is going to fall after that.
Right.
Then we got the double whammy of a big change in interest rates. And so we're not only facing this interest rate challenge, which I know all the other sectors are, multifamily, industrial, retail, we're facing a decline in overall demand. It's been really tough, especially for owners.
John, what do you see? Is there a correlation between the struggles from office? Is there a benefit or a negative reaction to multifamily?
Yeah, I think Kevin mentioned the interest rate concerns, right?
Yeah.
That affects obviously all sectors: industrial, office, multifamily. I think the difference today for multifamily, despite us being in a really supply cresting moment in terms of the timeline 24 and 25, you're seeing an incredible amount of demand, and you're seeing absorption across the country. So a little bit different than the dynamic of the office space today. And what's interesting about that is, multifamily has always been conditioned on demand has always been driven by jobs. Right. So we know, historically, you look for great office spaces, you look for those job hubs, and multifamily is a nice, I'll say connection point to that in terms of supporting that, creating a dynamic demographic, all of those things. So it's been an interesting challenge to understand exactly, and we spent some time, effort, and money on this, trying to understand where that demand's coming from, because with the work from home, and I think there was a data point that was just released in, I think it was the Wall Street Journal earlier this week, talking about Phoenix is now a true destination place for people traveling from out of state. So I think our year-over-year numbers are up 57% in terms of people living outside of Arizona, but traveling here for work. So really understanding exactly what that connection is long-term will matter for us. Obviously, there's a play for coming back to the office, which both of us are excited about. But connecting those two matter a lot, and we'll see how that office multifamily dynamic works out over time.
Kevin, do you see a specific type of office space performing better than in years past?
Yeah,
with current conditions?
Yeah, there's not a lot of clear trends in the office world as it's readjusting, but one thing that is crystal clear right now is that premier buildings are winning in this environment. Rents are actually higher. Vacancy is much lower than the balance of the overall market. And so the clear winners are the premier destinations, and those tend to be high quality buildings that have nice fit outs or can accept a really nice fit out and then are close to amenities. And so that is the clear winner. Everything else is a little bit a loser.
Yeah.
And then the part of the market that's been hit the absolute hardest, especially in a place like Metro Phoenix, is the back office market. And that market has really been hit hard as the major corporations with big service center type uses have shrank those operations. And there is very little, if not, limited to very little demand in that world. That's really hurting. But that Class A, especially the premium buildings, CB just published a big report on it. Aside from interest rates and the cost of TIs, it's probably never been better for them from a demand standpoint. That's just a very small portion of the market.
Right. So this is where my ignorance is going to shine right now. So multifamily, as you know, we have Class A, B, and C. Do you have that kind of identifiers similar?
We do. We have Class A, B, and C.
Okay.
The largest section of the market is B, but traditionally suburban office buildings that were newer, 2005, 10, or later built, were considered Class A. What's happened is the market is really bifurcated into, there's still Class A, but there's this premium category, which is walkable amenities and really high quality buildings that have amenities on site, things like training centers, fitness facility, on-site security, some sort of food service.
Podcast rooms
Would be the next evolution. And then take those buildings and then put them in a place where you can walk to amenities like lunch, drink after work, dinner, walk to a hotel, walk to your residential. And those are the ones that are in high demand. And that's really where almost all the net new demand is.
So I have a question. Sorry.
Yeah, please.
Use tapping your hand. I have a question.
No, there's a buzzer down there, by the way.
Buzzer? Okay.
Yeah.
So, as you stated, there's you're seeing that kind of separate itself, premier versus, all the way, just say B. How have you seen that translate in a per square foot number in general for Phoenix Metro? Meaning, if you're at Main and Main, best office building in town, walkable, all of the things you just mentioned, is that 55 a foot? Is it above 50? And then where does B? So it feels like it's doing this in terms of positive, negative.
You just described a K, which is how we used to describe the market for the first couple of years post-pandemic. It's hard to say it's a K now because the top part is real small. So it's like a little bit winning and that bottom leg of the K is really losing. The rents is very interesting. So one thing that's happened, this is a complicated answer because one thing that's happened is TI costs have gone up exponentially.
Sure. Tied to inflation, of course.
Yeah, tied to inflation, tied to the boom in construction here, and tied to tenant desires. So most of the people who are going to go lease a high quality office building want to create a really great environment because they want their people back at work. And they're trying to entice them to come back to work, probably similar to multifamily where the amenities are getting nicer, the buildings are getting nicer. In the office world, that Class A, people are building really nice space. It's a real big attraction because they want those employees back in the office. So we've seen TI costs go from peak market Class A TIs were $75 a foot around the time of the pandemic. If you did a deal where you got $75 a foot, that was a big allowance from the landlord. To now, you'll see deals well over $100, but the cost to build the space can be close to $200 for elite space. So rents have risen, but the economics in these Class A buildings have not gotten better because the TIs that the landlords have to give to attract tenants have gone up so much. But to answer the rent question simply, we're seeing rents in Metro Phoenix in the best buildings above 50. There are a number of buildings that can get that above 50. The whole Class A market is kind of north of 40. The premiers are closer to that 50 number. And then as you get into B and then C, it's really hard to define market rent because there's not enough demand down there. And if you get into the back office, it's a little bit of, if you can find a deal, you would do it. That gets into another issue we have, which is all this sublease space. So the day the pandemic started, we had 1.1 million square feet of sublease space. As we sit here today, we have over 7 million square feet, and that includes well over 1 million square feet if it's already been absorbed. So you've had this giant explosion in sublease space.
Yeah.
And so sublease space tends to be already fit out. So you save that big cost of capital to go move, and it's ready to go. And then people will offer a really good deal. So the sublease space is absorbing that kind of BC market. And so rents are up in Class A. Everywhere else, they're flat, but there is downward pressure because of subleases.
So if I was leasing a Class B office pre-pandemic, so say 2019 versus today, from a percentage basis, how much is it down?
The rents are probably actually relatively flat. Your concession package would be up double the free rent and probably double the TIs you would get. But we're north of 22% vacant in the entire market. There just aren't enough comps happening in that B and C market to really define lack of volume. Like part of the problem is if you lowered the rent even more, we couldn't get south of 15% vacant. So, in the multifamily world, you lower the rents enough, generally you can probably lease it. You could almost make it free, and there's some of these buildings you couldn't lease. Wow. That's not all the market, it's just a portion, but that makes the whole overall rent conversation has become very nuanced.
It's challenging. That's challenging. Well, this is a perfect segue because we're talking about vacant office space.
Yep.
Last year, our government, the current administration in the White House, released some tax breaks or even loan incentives on converting vacant office space to multifamily. How viable of an option is this?
Yeah, it's a great question, and it's a very hot topic across the country. I'll speak specifically to Phoenix.
Sure.
It's not going to have a huge impact on the market here, and it wouldn't cause any concern for apartment developers, in my opinion, in Phoenix. A couple of reasons. One, the most likely conversion candidates are going to be single-story office buildings that are put back into warehouse or industrial, more general industrial because they don't have the clear height. We have this big back office market out here north of 10 million feet. Most of that is office buildings that sit in a building that kind of looks like a warehouse,
right,
but is full of people. The much easier conversion is to take those buildings back into industrial. You have excess parking, you can build another building. And so that part's easy. The other option is to just simply tear down a 2 to 3 story, 1, 2, 3 story office building and purpose built, whether it's industrial, multifamily. The place you see the big conversions are really in land constrained markets that tend to be more urban.
Okay.
And it's going to be hard to go get a building shell entitled. Even if you go to downtown Phoenix, there's still a bunch of city blocks available for sale. You could just go build purpose-built residential. So we don't see a lot of office to residential conversions. What we see is a lot of office going away. There's already been 4 million square feet of office buildings either demolished or planned to be demolished. That's on a 100 million square foot market, so it's like 4% already. Almost all of them have gone industrial. And you've got some big high rises in the central corridor that are empty, but we don't see those all going residential because floor plate size, shafting, and there's still a vacant lot right next door. You can just go buy and build a residential tower.
So to that point, do you see, what do you foresee most metros, and for those of, for the audience, like most metros, like that's where the job center is, right? We're so unique in Phoenix in that, you have really 4, maybe 5 sectors or 5 different pockets. If you count the 303 and the I-10 and industrial, what do you see downtown Phoenix looking like long-term, knowing that those buildings exist? And I've seen the decline happen in terms of leasing space.
Yeah. So I'm super biased to downtown. I loved it. I grew up here. I want downtown to be great. My wife is from Chicago. We spend a bunch of time there. They've got one of the greatest downtowns in the world. So I'm biased positive to downtown. The downtown renaissances all start with people, and they start with people and restaurants and bars and an ecosystem. We didn't have that. There were not enough places to live downtown. The brightest hope for downtown is all these apartments that are under construction. When you get, and you guys would know the numbers better than I, 5,000-6,000 people living down there, they're going to need a place to go eat. They're going to need a place to go have fun. They're going to need social venues. They're going to want the parks nicer. The renaissance is going to have to be driven by residential. It's not going to be driven by jobs. The employment community does not view downtown as a place they want to be. Right. Now, we are a state capital. We're one of the biggest cities. It's just, city government is there. We're one of the biggest counties. County government is there. We are a border state. We have a massive federal government. So you got a big government presence down there. But aside from government, the private sector employment is limited. And so that's going to be a challenge. It's got to be led by residential.
Well, positively, if you look at so to that point, there's a couple data points. People don't realize that we've really grown up as a city post the GFC or post 2008. So from 2011 prior, we only had 12 buildings that were 5 stories or more in the multifamily sector, right? Wow. So you think about that in a population of probably 4.2 at that time. Now it's close to 5. That's really unique, meaning we're garden style mostly. Today that's transformed if you look at the per unit per acre type of numbers. But when you think about downtown 18 through 2026, it'll be 1 or 2 in terms of number of units delivered in the marketplace. So I think that speaks to your scenario, like build it and they'll come. I know going to First Fridays once in a great while, it's really activated. And I think back to being here in 2005, it's completely different. So hopefully that is the magnet that gets more jobs in downtown.
Yeah, you got the education, growing education based down there. ASU going downtown is probably the best thing that could ever happen to downtown. Way better than a stadium. Creighton now up at Park Central, the growth of GCU. There's lots of good things from an education standpoint. You need the bodies. Once the bodies are there, they have all these young knowledge workers living in all the apartments that are being built. Then you'll find your first set of employers that want to chase them downtown. Hopefully, let's get those things filled up in the next couple of years, and then we'll try and do some
2000s talking about down. It was just dark. There was nothing to do.
Yeah,
there was nothing to do, and then it just revitalized itself. The entertainment factor, absolutely. I agree with you. That's great. And I wanted to point out, your wife is from Chicago?
Yeah. All right.
Kudos. Love it.
Great city.
Bring more Midwesterners out here, right?
Yeah.
Good people. Let's go back to converting office to multifamily. So we know that this market is not really ideal for that. But when it comes to that just concept, right, I'm looking more for the option of building affordable units, which our country needs, of course. What challenges are being faced with that type of conversion, though?
Yeah, the physical structures don't really line up is the biggest problem. The floor plates are going to be almost in all cases bigger than 15,000 feet, but more above the 20,000 square foot, they tend to be too deep for residential. So you're going to have the challenge of physical footprint that doesn't really line up. Then the cost to go recreate all of that vertical infrastructure,
Plumbing, et cetera.
plumbing,
Yeah.
electricity. If you want to try and create balconies, virtually no office buildings are built with balconies. You didn't want them. And so it's just really challenging. Look, there's a handful of empty high rises downtown that people are considering and looking at trying to find ways to convert. It's just really problematic to go do a big conversion versus buy an empty piece of land right next door and build what you
Ground
know
up.
will work.
Yeah,
and so
you mentioned that earlier.
yeah, that's the challenge.
Similar cost, right?
I mean, maybe less than 5 mid-rise to high-rise buildings get converted, but even that, they would have to be really successful in cities where that's more in demand, and then somebody would probably come try it.
Yeah,
here.
10-minute drive through downtown Phoenix, you realize how many open vacant lots are available. It's just
Yeah. That's going to be
you're
tough.
spot on.
Yeah. So let's have you put on your forecast glasses if you're up for it. Another 5, 10 years, maybe 20 years. Do you see the office space having a rebound in the foreseeable future?
Yeah, for sure. I mean, there's still a function where people need to go to work, and people want their employees to collaborate, and they want to nurture people, and they want to mentor them, and they want them to learn, and they want to build great companies. And I don't think you're going to do that with everyone working at home. I think that's the general consensus. Today, we try and stay a little bit away from the prediction market on the return to work, because we're in the infancy of what happens post-pandemic and with the advent of AI. And it's not really AI is threatening the office market. It's just automation. And so, the world is automating the way tasks are done. And some of those tasks used to be done by people in operation center buildings, and now they're no longer being done by those people. So it's a little bit hard to see the immediate future for the back office and the big service center market office buildings. The Class A stuff, people want to go to work. They want to build great companies. They want to collaborate. They want to have their employees present so they can learn and get better. We're relatively positive on that. Through 24 is going to be tough.
Sure.
Early part of 25 looks like it's going to be tough as people start to sell buildings that have loan issues. And, we think in the early part of 25, you're going to see some people sell buildings at a loss. Most of those buildings are going to be the undesirable ones. And so that'll really start to create market clearing pricing. It's going to be interesting for the next 24 months. The good news is the demand side seems to have stabilized. There are deals to be done. Tenants want to move. Companies are growing again. It's just there's this big kind of overhang of all this excess space post-pandemic.
John, Kevin mentioned, employers asking employees to come back to the office, right? We mentioned in a couple episodes prior, the reason for any of our residents moving out has changed. Historically, it's been, number one reason has been bought a home, right? That has dropped from number one, and it's gone up to moving out of state. In fact, I had a local developer just earlier this morning ask me, what do you think that reason is? Is it because most of the larger employers like from Chicago, New York, wherever, big cities, that they're calling their employees back? Does that mean the people that were working remote chose Arizona and now are having to move back to their home state or city?
I think that's a piece of it. I mean, it's anecdotal, but I call it the boomerang effect. I think, you had Phoenix, and for what it was, COVID got a little bit blue and red, and Phoenix was mostly considered open for business. Right. So you had a lot of people fleeing states that were very constricted in terms of, stay at home, masking, all of those things. And I think they were seeking destinations where they could just live their life more freely.
Sure.
And I think a lot of people got to experience that in Phoenix. And, at some point, job calls, and it calls you back. And if you were living here, and I know a guy from San Francisco, he was here for about 12 months. When his home office said, no, you got to be here 3 days a week, that doesn't really work from a travel schedule. Maybe you can plug them on the front or the back end, but it becomes much more difficult to fly back and forth.
Right.
Now, the numbers I mentioned earlier, meaning it's becoming more of a remote type workspace. I think, people have enjoyed Phoenix, and you're seeing some of the folks that actually fleed big cities. This is the other boomerang effect, and we're seeing this in our data on the demand side. So unique visitors to Mark Taylor's website, you're seeing a lot of people come from Idaho, Montana,
Yep.
Utah. I mean, it's pretty predictable that you're seeing these folks come back in droves. So at least searching and moving here, looking for apartments. So I don't know what the forecast looks like, but I think if you go back to the human connection, as you mentioned, to build great companies, you have to be together. I think you can service the business, but can you create great ideas? Can you exponentially grow certain departments, certain things you're trying to create? You have to be together. And I think great companies with great cultures, people want to do that. So they want to find a great space. And I think you're seeing it with what you said, the very top tier of the Class A space, the exceptional space. People are like, oh, this is a lifestyle, right? At work. This is something that I love to do. I want to be here. I want to connect with my employees, my coworkers. So I think that space will continue to do well, assuming the economy holds up. But the back of the house, back office stuff is going to struggle. I mean,
It's going to be really challenging. I mean, one of the things you guys, I've seen your podcast and you talk about people moving here and the boomerang effect. I mean, we did have a lot of companies relocate here from places that were more challenging. And those decision makers live here now, and you can feel the pile-on effect of that as their employees are now moving to be closer to where the leadership is.
Yeah.
You can't understate the effect of the semiconductor industry and their expansion here. I mean, like that is like astronomical. You guys have talked about this. Those are astronomical amounts of capital being spent. And so there are a lot of really big positives, and enough of those people are going to need office space that the future is pretty bright. It's just you got to determine which sector of the market you want to be in, because it is not like residential where enough people will move here and everything is full.
If it's not the first question that investors and developers ask when they're first looking at Phoenix or Arizona for that matter, I mean, it's right there at the top. What's happening with TSMC or Intel.
Yeah.
And what about the suppliers? How many more jobs are coming? How much more is going to be developed?
Yeah, I mean, I don't think anybody knows the true answer to that, because this is like unprecedented levels of capital and improvement in the tens and tens of billions of dollars, plus all the suppliers are not here. They're all lining up. It's really fantastic.
Yeah, I mean, we're
for
used
the market.
to, a lot of M's, not B's, and to have 60, $80 billion of investment, and then the suppliers behind them, and the momentum of
It's unreal.
the U.S. government. There's a lot of things.
One of our
to
clients
benefit us
had the biggest construction project in Arizona at $1.5 billion before the two chip plant
Blew
showed
that
up.
one out.
Yeah. So you
Might not even get reported on today.
I mean, that's still a big construction
But it's
project,
massive.
but they were the ones who pointed out that data point, and they were like, we're spending $1.5 billion, we're the biggest, and they're spending $20 billion plus each. So like it's hard to fathom.
I agree.
Yeah. Can you imagine? Would that fill up this room? $20 billion in cash? The volume.
You want to do a fun way? Do it in terms of the number of NFL football stadiums being built simultaneously in your city is like over 100. Those two projects alone are like if somebody broke ground on 100 football stadiums at once. Like
Great point.
To give you that came from the client, and like I was like, wow, the scale is amazing. It's great.
So I know, John and I, we are transplants, but this is home. Arizona is our home.
Sure.
And here's, 99, you were 2001. You're the native in the room out of the three of us. Still look at Phoenix, Phoenix surrounding area, still bullish.
Oh, I'm super
This
bullish.
is the place to be.
Yeah, I mean,
and this is not a biased opinion right now, right?
Yeah, I mean, we are transitioning from a pure growth economy to we've got great companies here. We've got people with deep roots. So I'm still super bullish on Phoenix. Aside from being hot in the summer, it's a pretty awesome place to live. And there is just a ton of opportunity for young people or those who want to move up in the world. So yeah, it's a great place to be.
From 114 to 118, is there really a difference? Degrees?
Anything over 110 is really hot.
It's just hot. And we know it's happening every year, right?
This guy's like the.
You yell
oh
at
my
me
God.
every time. I know. Go for it. Come on. Go ahead.
I mean,
lean in.
every day I could ask him at 2 p.m., 10, like, what's the temperature? He knows it. I'm like, it's just hot out.
It's just hot.
We have jackets on in July.
I know it. And we'll continue through August as well. Kevin, this has been fantastic. Really, really appreciate it. We do have a tradition at the end of our podcast with our special guests that we get to talk and share what we're grateful for today. So I'm going to turn to John first because I'm just throwing this at you.
Okay.
Give you a little time to think. JC, what are you grateful for today?
So many things. You haven't told me what the temperature is today yet, so that's
118. Sorry, it's 118.
Okay.
By 4 o'clock. What time is
great.
it? It's
That's
coming.
great.
Yeah.
I think I'll speak to Phoenix, meaning in Arizona. I moved here in '01 with very few coins in my pocket and a U-Haul with my girlfriend. And Mark Taylor helped kind of forge roots for me into this great space. And I love what the state's given me. So I will do everything I can to protect it and support it. And I just love what really lies ahead for Arizona. And we talked about, the chips. So I add the C as a sixth C of Arizona. I think there's a lot of opportunity ahead. Some of the things you can't control, onshoring, as you mentioned, the location where we are, workforce, investment in ASU, downtown, all of those things. I just think a diverse economy matters. And I think if we legislate the right way in the state, we have a lot of opportunity to be successful. So thank you, Arizona.
Thank you, Arizona. I like that one.
Wow, that was good. More professional than mine.
You made me think of it. I was going to go family, which I do a lot.
I've got a comedic type of answer for mine. So go for it. You just unleash.
I was going to say family. I've got a great family, so I'm super lucky. Great wife, great kids, lots of friends. Really strong community here that makes me happy, and I love being in Phoenix. I am also very conscious and appreciative that we live in a great place. Like, we live in a place that's growing. People want to move here. There's opportunity for everyone. Your story is kind of what I was referring to. Move here out of college and go make your way in the world and become successful. And I think that it's very lucky that we live in that type of space, whether it's a country or even a state. So I got a great family, lots of great friends, and really lucky we live in Phoenix, Arizona.
Who's I'm going to put you on the spot.
Yeah.
Name your best friend, first name, go.
Oh, God, I can't do that. It hurts somebody's feelings.
He's on camera, too. He's on camera, too.
Yeah.
By the way, that was the best answer you could come. Yes, great answer.
My wife. Yeah, there we go.
So I'm gonna share with you what I'm grateful for is Wi-Fi, and let me explain. I got to give you some context. Over this past weekend, my son and I, 11-year-old son, Wi-Fi goes out in the house. It is the first time that Wi-Fi is a great benefit for all of us, right? Nowadays, it's a necessity. I never realized, and my relationship with my son was tested over a 2-day span because we actually had to have conversations with each other for 48 hours straight. And at the end of the second day, my son, my own flesh and blood, turned to me and said, I don't want to talk to you anymore, Dad. We've talked about everything. So I'm grateful for Wi-Fi is
good news.
What it comes down. Yes.
Post this podcast, I'll show you the hotspot on your phone so you'd have Wi-Fi.
Well, my house, unfortunately, is also in a dead zone of cell service. So I couldn't make phone calls, couldn't look up anything. But it gave us a great weekend to play Uno about 45,000 times.
Sure.
Connect 4 and every other board game that we had in his closet. But we went through all of them, believe me.
It's a good bonding moment.
It was good bonding. But he finally got sick of me. Yeah. Finally got sick of me. Kevin, can't say thank you enough. I really, really appreciate that. Very insightful. I think all three of us will say it now. We love Arizona. Come and visit. Come and build. Come and move your companies here. And if you need any information on what's happening within the market, don't forget about Multifamily Metrics. It is a subscription. We share several different reports. Please go to Multifamily Metrics and sign up. And thank you again, Kevin.
Yeah, great to be here. Thanks for having me.
Kevin.
JC, appreciate it.
Nice job.
Multifamily Forward, presented by Mark Taylor Residential. Have a great one.